Hi, welcome to the third episode of Coffee with Kabara. It's the first episode in 2020. I had a pretty good holiday season. I hope all of you did. Happy New Year. My daughter's first birthday was New Year's Eve, so we had a lot of celebrating to do. She's been walking. It's like a very exciting time in my house right now.
Oh, that's awesome.
It's awesome and horrible all at the same time, right?
Yeah, everything gets padded. You go through that stage, and we ripped the Band-Aid off, and nothing is now padded. And they were very interested for a period of time. Now they're not, and it's actually kind of cool.
Good, good. Well, I'm looking forward to being able to take the pool noodles off everything when we aren't worried about her like falling and gashing her head open. So we're finally getting back into our regular routine, and you know, new year, new you, people are looking for new starts. So I thought that this month would be a good month to talk about purchasing a new home after a divorce, right? Almost every one of my clients is going to go through this. And so I'm speaking with Michael Kenyon, a branch manager and senior loan officer from Union Home Mortgage, about that topic today.
Hello, everybody.
In addition to having worked in the mortgage industry for, over a decade at this point?
I'm in my 13th year.
It's a long time. Michael also has 2 kids. He enjoys hockey. He lives out, I think, in Loudoun County.
Leesburg, Virginia.
There you go.
Love
beautiful, beautiful town. And I thought he would just be a perfect person to talk to about purchasing a home after divorce and what different things you might have to take into consideration than when you're purchasing a home either as a married unit or just as a single person. So I wanted to do this topic in January, like I said, because a lot of people think new year, new resolution, new me, I'm going to lose the weight this year or read 100 books this year. I don't really do resolutions. I'm more of a new year, same me person. What kind of person are you?
I co-sign on that.
Yeah.
If it's a resolution, then I kind of look at myself and I say, I probably should have been doing it sooner. So I don't necessarily need the calendar to tell me that.
Right.
However, I do think there's some credence to flipping over the calendar and you can just sort of wash yourself of things. There have been times where I've had more difficult years than other years, and just seeing that 1-digit turn, it's like, all right, thank God that's passed.
Right, right. I guess it does put a nice period to history, and it helps you kind of take a breath and start over. But I'm with you. I feel like self-improvement is a continual process. I shouldn't have to only be able to do that beginning January 1, right?
If I did something wrong in the middle of October,
right,
I gotta wait 10 weeks?
Yeah.
Like,
yeah. So do you find a lot of people that you're helping purchase a home, is that the main transition they're going through, trying to buy a new home, or are there also other changes going on in their life? They're moving geographic areas, job change, what have you?
So when someone's buying a home, it is generally regarded as the biggest purchase in their life. So something's going on. They're a first-time home buyer, so now they've started their career, maybe they met someone. So there's that element to it. Maybe they've been renting and the place is too small, or they are expecting something like that. Or they already have one and they're running out of room and they need the next one. So, or their kids are out of school and going off to college and they're downsizing. So every time someone's buying a home, it's always surrounded by something else. Somebody comes to us because they need the money. If they didn't need the money, then they wouldn't be coming to us. So there's always some major circumstance, because generally speaking, people can go to Target and pay for what they need. They can even go, to the car dealership and get what they need. But, here we are.
And how did you become interested in helping people going through divorce purchase a home?
Well, mortgage lenders, they've got a bit of a reputation as sort of used car salesman-y. And it's kind of deserved. They were key players in the 2008 financial crisis. Whether they want to admit it or not, they were. I wasn't part of it. I started in 2007, like right as the whole thing started.
Yeah, your bosses were responsible for that.
It was all them.
So
that whole thing, everybody was guilty. But they're the ones that had the money, they gave it away, and they saw everyone's docs, and they blessed it. So lenders, they have this reputation of being sort of used car salesmen. And there have been a number of times where I've just seen circumstances come across my desk, and I look at it and I just say, why? How? Like, why would somebody look at this and say that this is okay, but they don't understand? This is not their area. And when someone is in a time of crisis, and we'll use crisis as in quotations, they can be easily taken advantage of. And if they don't have someone reputable or someone they know or just someone that they can trust, it's very easy for them to kind of get steered down the wrong path. And that slick back used car salesman, they're in that industry. They're in all industries, but they seem to be in this one. And I just don't want to, I'm a product of divorce. I don't want to see somebody get taken advantage of. And when I see something come across it that just looks funny, I got to help them out.
And are people who are going through divorce or immediately post-divorce, do they have any unique issues when they're qualifying for a mortgage?
So every divorce is different. As you know, there's anything from, who gets the kids on the weekends to I want the set of dishes, so everyone is different. The things that we look at mostly are alimony and child support, whether you're paying it out or receiving it, and then division of assets. So that would be source of funds. So we want to make sure that the person is going to qualify to buy the new home or to stay in the marital home. So if you're the one paying, you now have this new major expense. We got to get the divorce. You don't need the divorce decree, but we need some sort of separation agreement or something to show what the expense is actually going to be.
But a signed agreement, if someone, say, hasn't met their 1 year of separation, so they aren't divorced yet, if they have a signed agreement, you can qualify for a loan based on that?
We can do that, yeah. It's signed, it's notarized, and you're going through it. There's nothing that says you still can't buy a house.
Right.
So we don't want, the divorce it's not a hard stop at just being separated, but you got to have something in principle, because in most circumstances, it's kind of understood that once you have the separation agreement there and signed, there generally aren't major changes as you move your way forward. And, it's a long, stressful process. Nobody wants it to drag out any longer than it needs to be done. So let's all lick our wounds and move on.
Right. And is there anything someone who's going through a divorce can do to help ensure that they're more able to qualify for a mortgage? What can they do to grease the wheels?
So there are a couple things you just want to keep an eye on. You want to keep your debts in line. You obviously want to keep an eye on your credit. You don't want to do anything to hurt yours or hurt your spouse's. That just makes everything worse. As you start to divide up your assets, just know the timing of all that and how it's going to affect your approval. So, because what lenders are going to do, they're going to ask for documentation of this. If we have a divorce decree that, or a separation agreement says, these assets need to be divided by when, or the home needs to be sold by, X point in time, a credit report might expire, certain things might expire. So if you have a credit score of a certain threshold, you might not want it to go past that date, because if you have to pull a new credit report because you're waiting for something to hit, then you might be looking at a different interest rate, things like that.
Right. And I'll tell you, on the lawyer side of that, I have had clients say to me, look, I'm in the process of buying a house and the pre-approval expires on X date and we need this agreement signed before that so that I can move out of the house. Everyone wants me to move out of the house, so we have to get it done.
Right.
Or, as you've mentioned, doing asset divisions as of a certain date. I've also had clients tell me that they need a certain length of time of spousal support to be able to have that considered.
6 months is the new Fannie rule. So if you want it counted as income, you got to show 6 months consistently. And it can be, and that's where it gets kind of dicey. If you have a relationship that's not going so well and just hasn't been a smooth process, if you're getting 3 of 5 months, can't use it. It's got to be consistent. So when things get a little, touch and go, if we can show that you've received the income for 6 months, then you're going to be okay. And that's only if you're using it as qualifying income. If you can qualify using, just the salary or that type of thing, then you're okay. But if you have someone who is a stay-at-home spouse and they're going back to work and then they need that income to qualify, and the other spouse is, kind of withholding it and being difficult, then you kind of have some issues. That person's going to have a hard time. So that's the biggest thing, I would say, when receiving alimony and child support, is showing continuity of income, is the technical term that Fannie and Freddie go by.
And that just means making sure that it's the same amount and timely and every month, and
It's
we can rely on it.
Right. So, I mean, lenders, they have let's circle back to the financial crisis. We had Dodd-Frank in 2011 and ATR-QM in 2014. So we need to show that someone can qualify and consistently make their payment. And if you're relying on your ex to provide you income, and they're only giving it to you once a quarter,
right?
That's not, if it says in the agreement once a quarter, okay, fine. But if it says monthly and they're giving it to you once a quarter, that's different.
Right.
So,
what kind of documents do you need to review when qualifying someone for a mortgage going through divorce?
So we have our typical 1 month of pay stubs, 2 months of bank statements, 2 years tax returns, 2 years W-2s. But then in terms of the divorce, we look for the property settlement agreement, the marriage settlement agreement, the divorce decree. And just depending on where we are, we can usually work with any of those documents. And we look through the whole thing because for the most part, we're not really going to care about some of these other things where you're just, who gets the dishes and that type of stuff. But we need to make sure that, the alimony and the child support and those things are all netted out. If there's other expenses, we're not adding in things that normally aren't taken into account, such as, cable bills and things like that when someone goes to apply for a house, because you don't have to have cable.
Right.
But we want to make sure that there's no added expense that would somehow take you over the line and then you can't qualify for it.
Right. You don't want it to say she's going to get the dishes, but then she's going to pay me 10 grand to get the dishes, and because you don't have the full agreement, you've missed that additional expense, for example.
Correct. So yes, let's take something like that, and let's say, one person gets the classic car. Okay, great. But you got to pay me 15 grand for it. Well, you have $25,000 in a checking account. Okay, here's 15 grand of the 25, you have 10,000 left. Well, you need 12,000 for your closing. Where's the other 2,000 coming from?
Right.
So that's how a lender sort of works backwards in that circumstance. So we got to see the whole thing. That person can turn around and sell the car.
Right.
And then they can use that as a down payment. So.
And when you are qualifying somebody for a new mortgage, say they're separated but not yet divorced, would they have to qualify for that mortgage with their spouse, by themselves? Could they use a third party, like a parent, to help them qualify?
They certainly can. And you'd be surprised that co-signers are generally very willing. We see it quite often, especially here in the DC metro area. It's just so expensive. But if you're asking someone to co-sign for you, they generally already know that you're probably in a little bit of a stressful situation. They can do something, they want to try to do something to help you out. I generally think people are, good at heart. So a co-signer is good. When it comes to that payment, if someone is staying in the home, we need to show that they've been making that payment. If we're qualifying you against it, usually you need 12 months, so you're still going through the process there, but now we're also working into, are they receiving alimony and child support for the vacating spouse?
Right.
Are we at 6 months to offset that? So it does all come down to that MSA, PSA, the timing of everything, the age of the docs, when are these things supposed to be executed by, and in one sense, we really work hand in hand with divorce attorneys like yourself to say, okay, this person's good, this person's not, we need to be here. And then at this point, they can both, kind of move forward and just go on.
Have you worked with two people who are going through a divorce?
I have. And for the people out there, it probably sounds like a conflict of interest. And on its surface, it sort of looks like it. In reality, it really makes it a lot easier on them. Because if for some reason I need something from this file, from one spouse, and it's already in the other spouse's file, I can go and grab it and I don't have to bother them.
Right.
And one underwriter is going to see both loans, and they're going to say, okay, these things are all moving together. Good, great, here, done.
Theoretically, it also helps, right, if you have, you need 6 months of support receipts, for example, the support payor, if they want to get qualified for a loan, also have to show that they're complying with their agreement, theoretically, right?
Right. So again, all that just sort of spills over and plays off one another. And so when you have this person who, again, they're getting the income as alimony and child support, but the ex is paying the current mortgage, but he's got to refi them out. So we're taking one person off a deed and they're getting cash. You're trying to bring in another lender whose underwriter might interpret it kind of differently. If things aren't really great between you to begin with, there are some divorces that are amicable. There are many that aren't. And you now bring in this other entity that might interpret it a little bit differently. And it's just a whole nother thing.
Right, right. Is there anything I should have asked you, but I didn't, or do you feel like we covered the aspects of divorce and buying a home, qualifying for a loan?
I think we hit on a lot of topics. And I could talk on and on about these. And the thing is that everybody's is different. So there's always going to be questions, and there's no black and white. There's just a lot of shades of gray.
Right.
And the important thing is to talk. Like, come to us and talk, because we can get that situation in front of an underwriter and we can get it blessed and say, okay, yeah, you can do this. I have one right now where she's been living separately from her husband for 5 years. He won't sign anything.
Right.
And so we have shown that he's been making the payment, and she doesn't have the money to put anything down. So on paper, it would actually look like occupancy fraud, because he's staying in the larger marital home and she's buying a smaller home in the area. And she only has 5% to put down. Well, that screams investment property. But we can show that he's making that payment for 5 years, and so now she can go buy her place that's smaller and she can just move on with her life because he won't let her.
Yeah, yeah. It's rough when that happens, when things are pretty amicable, but for whatever reason, you just can't get one of the parties to finalize. Those can be some of the hardest, most frustrating cases in some ways, because your client just has their hands bound. Because it's amicable, they don't want to rock the boat, but then nothing ever gets finalized. I have had clients separated for, I think my longest was 12 years.
Wow.
And it's just time to
That's
move.
long.
Finally, somebody wanted to get remarried, and that will cause a divorce every time.
Right, yeah.
So you mentioned that every case is different, of course, and that people are always free to call you and kind of work through their scenario and figure out what you would need in their case to qualify them. So how can people get in touch with you?
So I love phone calls. Call me on my cell, 703-380-3149. The other thing, I try to be very searchable. So just Google Michael Kenyon Mortgage and all the social media platforms will come up, and you'll see the reviews. And I let my past customers kind of speak for me. And so far people like me, but I'm sure there's some people that don't. But the actual website is unionhomemortgage.com/mkenyon.
Great. So this has been a brief discussion with Michael Kenyon, branch manager and senior loan officer at Union Home Mortgage, regarding buying a home just after divorce. My next Coffee with Kabara is going to be Thursday, February 13th at 10:30 a.m. with Joe Hudson. You know Joe. Joe is fun, and he does a new home buyer seminar specifically aimed really at people who are buying their first home. He does it all over DC. He's going to give us a little abridged version here February 13th at 10:30 a.m. I, of course, am Kabara Korth-Praskovich, counsel at Maddox and Chirac. You can like my Facebook page, my LinkedIn. You can Google Kabara, Kabara, family law, and I'll be the only person that comes up. I hope you all have a great day, and I look forward to speaking with you next month. Bye. If I can figure out how to close this.